test, test, test. Can you hear me? To Roxom TV, and also welcome back to Jam Crypto, whichever platform you're watching on. I'm of course your host Jamie, coming to you from Hong Kong, my new office in Roxom TV, and really excited. But what's more exciting is what Jerome Powell said about the market. Like, we're gonna take a deep dive about the macro, also what's going on with the global liquidity, with on-chain analysis as well, because I promised you guys we're going to do a deep dive on both TA, on-chain analysis, and also look at some of the native news in the crypto space. So that sounds very exciting, but like I would say I'm quite surprised that Bitcoin didn't pump even harder when Jerome Powell came out UT. So that's extremely bullish. That means global liquidity, US being the most powerful country in the whole world, is getting in. And yeah, Bitcoin is sitting at 113K. I think that's a steal. Like, that's a no-brainer. But again, like, people that are FUD on Twitter are saying that maybe the 4-year cycle is still playing out. Of course, we're going to look into that as well. I'm going to back my claim with data, not just with some BS and some news, some narratives and stuff. But without further ado, let's dive into the hourly chart. So as you have been watching my channel for quite some time, you know that I like to start my show with the hourly chart, and then we're going to move on to the daily, and then finally to the weekly chart, so that we could build from a shorter time frame to a longer time frame. Anyways, Bitcoin right now, we are sitting at 112K. We were touching 113K. So one thing I mentioned about so the volume level. So 112K here is basically a level that Bitcoin has to consistently battling with. Like, we have to stay above this level because we are seeing so much volume around 112K. So it makes sense that, okay, if we zoom closer on the hourly chart, it makes sense that we are building and really using that as the support level. So there are a lot of price data around that. So one thing I want to see is that Bitcoin really managed to stay above here. Otherwise, I hate to break it to you, like, I'm afraid like 109 or 108 is still on the table. But one thing interesting that I note, okay, let me go ahead and close the volume because that's very annoying. One thing interesting I saw is that we are seeing this, like, essentially an uptrend. We are seeing a higher low. So this is where it gets interesting. So what I want to see is that first we need to hold that volume. So VLVP is essential that we hold above 111 because it's constantly changing. So basically the most volume around here. So we have to hold this level, and we also have to bounce back from this uptrend. Like, okay, wicking down is all right, but like if we end up getting a hourly candle close below this uptrend, then I hate to break it to you, it's not entirely bullish. this is at least on a shorter time frame, at least what I'm seeing on the hourly chart. So if we lose this uptrend, then 108K is still on the table. So yeah, that's one thing we have to bear in mind with. Let's also hop on to the daily charts to see what's going on. So again, on the daily, one thing I noticed, okay, on the daily, I have to draw the rectangle because I love drawing that, love showing that rectangle. So this critical level I'm eyeing is basically between 108K to 119 to 120K. Why this level, like this range, is so important? Because we are essentially just like bouncing inside the spots. We are just like consolidating. I know what happened last week on Friday night. It was such a horrible event, and a lot of people completely got wrecked. But the truth is, like, I hate to break it to you, like, if you guys are just staying in spot trading or like long-term holding Bitcoin as a Bitcoin investor, then it's actually not that bad. Like, if you're not holding altcoins or even holding a leverage position on altcoins, then you are like, okay, you feel the pain, but it's not as severe. Okay, a huge drop, like a 19% within just like an hour, that's huge. But like, the truth is, like, a Friday night, at least in Hong Kong, a lot of people are sleeping. Like, I only found out the date later. If you're holding spot, but if you are trading some contracts, you're putting leverage, then you definitely feel the pain. And especially when it comes to altcoins, like Sui dropped to like 55 cents or something. That's so ridiculous. It dropped 85% within just like one hourly candle. So that's not normal. But the truth is, like, looking at Bitcoin, if you just do spot trading, you're barely feeling the pain. And right now we're sitting at 113K. So that's really not much to complain about. And if you also hold the Bitcoin monthly return, okay, we October has this narrative of being called October. Right now, B is not playing out so well, but the truth is, like, recover most of that loss. Okay, we went down like 1% compared to last month. Of course, like September was like basically very surprising because usually we have like rectangle, but like October, we're still trying to get there. We are only mid-October, only entering the third week of October. I mean, second or third week, third week of October. So I do think we could still catch up to the October narrative. Let's also hop onto the weekly so we could slowly build our case to a longer time frame. So on the weekly, I do want to take it like one at a time because, as I mentioned yesterday, I keep talking about the 4-year cycle. Okay, there is basically a group of people who believe that the Bitcoin cycle top already happened on 6th of October. So there is actually a reason why people would think that. Because if you go back to basically the entire Bitcoin history, then you know that if you cycle bottom, so cycle bottom to the cycle top, that like eventually get a magical number of 1064 days. So that's how some people are stating that exactly on 6th of October we have already seen the cycle top. But I would argue, because there are different ways of calculating the 4-year cycle, I would argue that maybe taking this cycle top to cycle top, then we'll get a different number. So for example, this is back in 2013 to 2017, cycle top to cycle top, then we'll get like 1477, and then here 1444, 1414, and then in 2021 November, if we use this magical number, then we'll get like Q4. I do think we're going to get a cycle top, unfortunately. I am very level-headed. Like, I would love to be proven wrong. Like, I'll be more than happy to enjoy a few more months of bull market. But like because of what happened basically last week, there's like so much pain, so much pain in the market, so much FUD, and people are saying, okay, I should have sold on exactly 6th of October, which is some of my friends did, and they were like making fun of me. So I did pull out some of position, but I got out of all the leverage position. So thank God I did that. I wasn't holding any leverage contracts. I pulled that out even before, like few days before 6th of October. But my spot position, like especially when it comes to altcoins, I still got burned. So I do feel the pain as well. But point being, I do see there are bullish narrative, and especially with Jerome Powell basically came out and said something really bullish. And if you go to also one thing I like using as the indicator whether we have come to the end of the cycle top, basically this is the 50-week moving average. Actually, let me hop onto another chart because the Binance one doesn't have a look. If we go to the weekly chart and focus 50 weeks, and we are looking at the weekly candle. I cannot see my screen sharing on YouTube, so maybe if Sherry could fix that. So basically, I was saying that 50-week moving average. So if we have a weekly candle close below, actually close below, I'm not talking about wicking below, but closing below the 50-week moving average, then we could be like almost certain that the cycle top has already happened, that we are entering another prolonged bear market, which is extremely painful. The reason why I'll say this because this indicator has never failed us. Let me show you. So like if we zoom closer, wicking below, so that's what happened, right? So back in April 2025, we wicked below the 50-week moving average. That's okay. That means it's just a correction. And same thing happened back in August 2024 and September 2024. So we're just like touching it. So touching is fine. However, if you go back to let's say November 2021, so we touch it first time, and then we touch it again and again and again, and eventually we actually close below the 50-week moving average. So closing below the 50-week moving average is a first sign that we are entering a bear market. And if you look at the current time right now, like despite that we had a huge dump, a huge market correction, and a huge market manipulation, Bitcoin didn't even touch the 50-week moving average. So there's like still some room for correction here. So on Coinbase is 107. Some exchanges is a little bit lower, but okay, we'll just use this one for now. So if we take a week moving average, we're sitting at 101K. So Bitcoin hasn't touched it yet. So from a technical standpoint, from a TA perspective, I don't think we have basically, I don't think the cycle top has already happened. And even though I do think the 4-year cycle is still intact, I think each year is going to get less relevant because when Bitcoin started out, it was like extremely small. It was such a small market cap and very easy to manipulate the Bitcoin market. But like right, Rock is in, institutions are in. Bitcoin is becoming digital gold, so becoming a risk-off asset, becoming a macro asset. So I do think the 4-year cycle is getting irrelevant as time goes on, but like until then, I like to be cautious. I like to be basically on the safe side because holding your entire bags, especially with altcoins, holding your bag for 2 years is definitely not fun. And 99% of the altcoins are not coming back. So, and one thing I do want to talk about before we move on Fed is that Bitcoin dominance. So we are seeing Bitcoin dominance going up. So essentially, we bottom at 57%, and we are on an uptick. Like, look at this, like from Friday, last week Friday, we have a week to touching a 63%. So that's really crazy. What my speculation here is that I do think the Bitcoin dominance is gonna continue to go up. The reason why is that we know global liquidity is unlocking. We know that central banks around the world, not just the US, but a lot of countries, many central banks around the world, they only have room to cut rates. So we know there'll be more money entering the market. So as more money available in the market pool, like I do expect Bitcoin gonna hit new all-time high in Q4, so within this year. And if Bitcoin hit new all-time high, it takes like a few weeks for altcoins to catch up, basically. So if Bitcoin hitting new all-time high, I do think Bitcoin dominance gonna rise again. Like if not, like if we have seen cycle top already, if the 4-year cycle is so intact and the cycle top already happened on 6th of October, then Bitcoin dominance is still gonna head up because no one's gonna buy. And bear market, like what type of coins suffer the most in a bear market? It's of course altcoins. So I do believe Bitcoin dominance is gonna go up. Of course, we're gonna take it day by day. We're gonna check it again. I'm here tomorrow and the day after. So let's see how this goes. Anyways, let's move on to some macro because it's very bullish. Like, okay, Jerome Powell spoke at NABE, like NABE annual meeting in Philadelphia, delivering a talk titled Understanding the Fed's Economic Outlook and Monetary Policy. So the biggest takeaway, Jerome Powell said that the QT, so quantitative tightening, which is the process of shrinking the Fed's 6.6 trillion balance sheet, may be reaching the end in the coming months, like very soon. Like, of course, he didn't give the exact timeline, but point being, this is dovish. Like, this is dovish signal. He stressed that the Fed wants to keep ample reserves in the banking system to avoid liquidity crisis like the 2019 meltdown. But of course, he didn't give the exact timeline, like when we're gonna, or maybe like a target balance sheet size. But point being, this is great news because, like, why this matters so much? Since, okay, let me go to the balance sheet of the Fed. So basically, since June 2022, the Fed has been QT. So you're seeing a top here. So I would say like April or March, something around that. We see a top of like $9 trillion. And then ever since we have been going down only. So we dropped from 9 trillion to right now sitting at $6.6 trillion. So the Fed has been running QT, letting up to like $95 billion a month in bonds mature without reinvestment. Like again, if they don't reinvest that money basically vanish from the system. So this the balance sheet from 9 at the pandemic peak to 6.6 trillion today. Jerome Powell, what he said here, so what he explained is that QT was necessary to inflation, but bank reserves had already fallen from like $4.3 trillion to just over $3 trillion. So ending QT would actually adding 60 to 80 billion dollars a month in liquidity without even calling it a QE. So that's passive stimulus and really good for the market, actually for Bitcoin. What he also noted, like from the recent liquidity drain, is that, okay, first of all, the US Treasury General Account, or TGA, rebuilt in early 2025, already pulled $500 billion out of the markets. And also, we could look at the RRP, which stands for reverse repurchase agreements. So the usage right now is near zero. This signal a very tight liquidity. So with less extra cash sloshing around, investors aren't parking as much at the Fed. It's like the pool of available money is shrinking, which can make borrowing more expensive or cause short-term market jitters. So Jerome Powell mentioned this as basically a reason QT should come to an end soon, just to avoid too much tightness. And this is about ending QT, because I do see some confusion. People like to tie rate cuts and also QE together, but they are actually different concepts. So let me explain. So that means lower federal fund rates. That means cheaper loans, more spending. This is a lot more indirect, where QE, that means Fed is actively buying bonds. Like the balance sheet here, like an uptick, buying a lot of bonds going up. So this is direct liquidity injecting to the market. That's QE. And Q opposite. So here we are on QT basically. Like if you see the balance sheet, the asset goes down, that means QT. So that's just the one of the confusion that I saw. Like point being, rate cuts, it might take a little bit of time for the liquidity actually enter the market. It might take like a few months, but QE is like direct injection, like it's a much faster. So that's why I am quite bullish, like especially in the coming months, so for TA and also about this news, like this narrative, actually, I don't know why people are there's so much fun on Twitter. Basically, it certainly didn't help. But okay, speaking of rate cut, we know that we are already pricing in basically 2 rate cuts in this year alone. So the first one, basically 95% of people are speculating we're going to get a 25 basis point cut, and then there'll be another 25 basis point cut in December. So 94% of people already speculating this. So point being, more liquidity entering, and the Fed kind of being forced to cut rates anyway because the economy, especially comes to the labor market, it doesn't look basically the report is not like very strong. Inflation tamed down a lot, like it's closer to 2%. It's not entirely 2%, but they kind of have to balance. So the Fed have to make a decision whether they being so straight when it comes to inflation has to be 2%, or they save the labor market. And right now the labor market is not looking strong because the unemployment rate in the US, like you can see, is going up. Like right now we are sitting at 4.3%. So that's just the unemployment rate. But hop onto the non-farm payroll, things are looking even weaker. Okay, for non-farm payroll, what it means is that how many jobs being added in the market. And here we are looking at a monthly basis. So usually 1,000 jobs, 100,000 jobs being added, that is like a ratio, like a metric we could look at. But what we're seeing here is that, we only added like 20,000 jobs. So that's a really market. So that's why it kind of leaves the Fed no choice but to cut more rates. So that's just the general macro outlook. And of course, when we have like rate cut, that's extremely bullish again. So let's actually compare Bitcoin and also where's it going on? So compare Bitcoin with the central bank balance sheet. All right, so the reason why I will say this is quite aligned with the whole global liquidity. For example, if we go back to, let's say 2020, because we are seeing a huge uptick. That is, of course, what happened was the pandemic money. So a huge uptick, and what we saw is that like Bitcoin rose like there might be a delay, but like Bitcoin essentially rose to like 69K. So from 10K to 69K. That's like really crazy. And same thing happened. So back in 2020, so we have a peak, right? So that's when QT happened. So quantitative tightening. So the balance sheet basically shrunk like more than 25%. And what we saw here is that there's a Bitcoin crash, like here, like Bitcoin crash as well. There is like the reason why I think Bitcoin is being so strong is that, okay, technically speaking, we are still, but we already did all-time high. So like in 2025, like the rest of the year, I'm actually really bullish. So that's just for TA. Let's also move on to some of the on-chain analysis because I promised you guys yesterday. So let's go to the first image I've got. So what you're looking at here is the short-term holder MVRV Bollinger Band. So what the hell is this metric? Okay, bear with me. So this chart looks at the behavior of short-term Bitcoin holders. So people who bought their coins within the last 155 days, the idea is to see whether these resellers are sitting on big profits, like which can make the market overheated, or on losses, like which can mean fear and pressure. So MVRV, of course, stands for like the market value versus the realized value. So market value just like the current price of Bitcoin, but realized value is like how much people are actually willing to pay for that Bitcoin. So that's MVRV. If the market value is much higher than what they paid, they're sitting on profits. If it's lower, they're underwater. So then we apply the Bollinger Band. So you can see different bands here, like different lines in different colors. So that's a Bollinger Band. So that's the volatility tool. These bands create, basically, they have the upper bands and also the lower bands and lower zones, and also around the average, like showing when the metric is stretched too high, so too overheated, or too low, like too oversold. So if we are near the upper band, so you can see the pink line on the upper band, right? So that means short-term holders have big unrealized profits. There's a risk of selling and also market is getting overheated. On the other hand, if we are close to the lower band, that means many short-term holders are losing money. They are basically, we are running a risk of capitulation, like panic selling. So this helps us spot extremes in sentiment and momentum for short-term holders. So what happened here? So what we found last week, like Bitcoin's metric touched the heater zone, so the orange dotted line, that area, showing short-term holders were sitting on strong profits. Right after that, Bitcoin dropped about 16,000, falling down to the green zone. So the green line here, you see that here. So from there, the price kind of stabilized and climbed back up to at the blue dotted line, though we got rejected again, then fell back to retest that green zone again. So at the moment, BTC price is below the short-term holder cost basis, meaning like recent buyers on average, they're losing money. Like historically speaking, when this metric hits the green zone, Bitcoin often sees a short-term bounce or consolidation, but the medium-term trend is still like a tug of water between bulls and bears. So this is only one metric. I like more on-chain analysis prepared for you guys, but like we're gonna take a break, like do a little, basically I need to have a sip of water. I will see you guys in 3 minutes and we're gonna dive deeper on.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
We're looking at is the short-term holder cost basis. What the hell is this? So this essentially tells us the average price that recent Bitcoin buyers paid for the coin. So short term, of course, it means like 155 days. Like we talk about that numerous times on this channel, actually. So level is important, shows the sentiment of recent buyers. So in bull market, so this short-term holder cost basis often acts at like a floor, so support. Buyers usually step in around their cost basis and push price back up. And in bear market, it often acts like a ceiling, so resistance. So recent buyers, when price reaches the break even, keeping it from moving higher. So right now, what we're seeing is that we are essentially at 113, so right here. So after Bitcoin's recent flash crash, so a huge drop, like a $16,000 vanish. So and also the $19 billion liquidation, that is so crazy. But anyway, so the price briefly climbed back above the this line. That was a positive sign for the bulls. It meant buyers were willing to defend the average cost, but Bitcoin fails to hold about 113K. So price kind of like slipped back under it, falling to around 110K. So what does this mean? Like if Bitcoin had stayed above this level, above this line, it would have signaled strong buying pressure and more excitement than fear among short-term traders. Since it dropped back down below, the market is shaky. A short-term bounce is still possible, but the burden is now on the bulls to take control again. If they can't, momentum may stay weak and bears could really push the price to lower. So this is the second on-chain metric we're looking at. Let's also hop onto the Mayer multiple, which is another very popular tool. So this essentially compares Bitcoin's current price to its 200-day moving average. So if the Mayer multiple is high, so above 2.4, the red line here, so above 2.4, it means Bitcoin is trading way above its long-term average. This usually happens near cycle tops when the market is overheated. If the Mayer multiple is low, maybe around like one blue line right here, it means Bitcoin is close to or below its long-term average. Like historically, it has been a good time for accumulation. So what we're seeing right here at the Mayer is moving between the blue line and the orange line. So this suggests that the market is kind of neutral to warm zone. It's not like extremely cheap, but not overheated either. So since June 2025, Bitcoin has stayed above its long-term 200-day moving average, showing the bulls still have control, like they still have a base to build on. If Bitcoin can keep pushing higher and break new all-time highs, this could be the foundation for the next leg up. But if price keeps struggling and fails to keep a strong run, it would show weak momentum, raising questions about whether this bull cycle can keep going. But if you ask me, like in every bull or bear market, like momentums always shift back and forth between the bulls and bears. Sometimes these changes happen over weeks. Sometimes it could even happen within a single day. Right now, it's hard to say like exactly what comes next. Some indicators show Bitcoin might be in oversold in the short term, meaning it could due for like a bounce. But since Bitcoin failed to stay above the short-term holder cost basis, the momentum currently leans towards the bear. So this makes the coming week a very important one. One big question, like will Bitcoin stay weak or fall further, or like will buyers step in and start a push toward new all-time highs? Based on cycle data, there's a higher chance that Bitcoin reaches new all-time high this cycle rather than starting full bear market just yet. And this aligned with my TA and also news analysis with what Jerome Powell just said. So that's for the on analysis. Let's also hop on to some news sessions. So some news I prepare is, of course, about Binance because it linked to the largest single day liquidation in history. So about $19 billion, actually more than that, but that's the official number we're guessing. So we stick with that. So $19 billion got wiped out because of liquidation. So during that flash crash, several assets on Binance, including Ethereum USDe, which is a synthetic stablecoin, and also Binance staking token, BNSOL, and the Wrapped Beacon ETH, so WBETH. So they temporarily lost the pegs. For example, USDe fell as 65 cents on Binance, even though on other platforms they didn't unpack. So it was a Binance issue. It wasn't USDe issue. So this fake crash led to forced liquidations of users where collateral was suddenly valued far lower than reality. So Binance is stepping in. They announced a $283 million in compensation and paid within 72 hours to affected users. Both the CEO, so Richard Tan, and also He Yi, being the co-founder of Binance, both apologize, and they have like this to add redemption prices to index calculations and also review and update some risk controls more frequently. So because they announced this compensation, BNB surged to a new all-time high yet again. Like I find BNB so interesting because like we are having a major market crash. BNB basically the only or one of the few altcoins that won't affect. So I'm not suggesting anything here. It's just very interesting to know. So why did USDe depeg Binance? Because USDe is actually traded on other exchanges like Bybit, Kraken. But okay, Bybit depeg a little bit, maybe like 92 cents to 95 cents, but it recovered quick, not as severe as Binance. On DeFi platforms, like no issue at all, only in Binance. So the problem with Binance is that liquidity dried up. Like their internal order book not connected to direct mint or redeem systems like that. It showed a fake crash to 65 cents. And the Ethereum founder wasn't so happy about that. Like he tweeted out like USDe didn't depeg, Binance did, which is very true. So what's the technical glitches? Like what's the issue Binance is having? Basically, the last issue they have is the Oracle issue. So Binance price rely on its own thin order book, not the broader market data. When liquidity dried up, prices collapsed on Binance, even though other markets were stable. And another issue is that okay, Binance system lets post assets like USDe as collateral. That's very crazy because like imagine you holding a long position and having USDe as collateral, and if the collateral lost like 35% of its value, then much easier to get liquidated. So that's why they are doing this like compensation to their users right now. And I mean, if I were Binance, I will do the same because like a little bit of money, like this is not a huge amount of money for Binance. Like, come on, guys, like $283 million. So, like, if I were Binance, if I were in Binance shoes, I would do that as well, just to send a signal to the market that Binance really safe and they care about the users, yada yada yada. All right, so that's for Binance. Let's move on to the last piece of news. We have to wrap very soon. So, we got to look at Japan here. So another macro news, and one thing I really love about Japan is that the regulation is actually protecting the users, so the citizens, Japanese citizens. What's happening is that the SESC, Securities and Exchanges Surveillance Commission in Japan, so they are preparing to ban insider trading in crypto starting in 2026. So the new rule will treat major digital assets like Bitcoin as financial products under the Financial Instruments and Exchange Act. That's the same law that governs stocks and bonds. So anyone caught trading crypto with non-public information, like for example, exchange listings or security breaches or token announcement, they can now face like surcharges on profit and in serious cases like criminal charges. Of course, the goal is to close the loopholes, increase transparency, and actually protect Japan's 12 million crypto users, especially after on-chain activity grew 120% year over year. So this matter a lot, and I love how Japan, when it comes to protecting the local citizens, they are a lot more advanced. Like they are basically a leader in Asia's regulatory environment, and also I will argue they might have like a better protection compared to the US, I would say. So there are of course still some challenges, like for example, like how could you see the insider trading activity if they're using DEX? So of course, like crypto is borderless. That makes enforcement really hard. Like especially coins like Bitcoin, we don't have a central issuer, and all the wallets are pseudonymous and often used across global exchanges. And once you get onto the DeFi platforms, basically you could dodge the Japanese oversight. But Japan will focus on licensed domestic exchanges, but of course, like activities on DEX, then you could really slip through the cracks. But point being, they're trying. So Japan's what they're doing, I would say, could really influence other Asian markets like South Korea, like India, encouraging similar bans. In the US, the SEC already prosecutes like insider trading, for example, back in 2022, the Coinbase case, but there's no unified law right now, just like overlapping SEC and CFTC enforcement. So compared to US, I'll say Japan looks a lot more advanced in consumer protection. And I'll say like US consumer protection is such a joke. Like titles like this, Barron Trump net worth hit 150 million. Like Trump 19-year-old son now richer than his mother. That's very interesting. I wonder where they got that money from. Let's just put it that way. Like Donald Trump being the president has been very beneficial for the Trump family, and they have been getting a lot of really nice deal flow. I'll just put it that way. Anyways, I'll wrap here because we have more amazing program on Roxom TV. So before you go, make sure you follow my Twitter is jamjamcrypto_io. Make sure to follow Roxom TV here. Of course, we live. Gonna hit the like. So we're live on Roxom TV. Make sure to subscribe on YouTube and also make sure to follow us on Twitter. Anyways, my show is 4 a.m. Eastern Time to 5 a.m. Eastern Time every from Monday to Friday. So of course, I'll be here tomorrow. Basically, follow us follow on social. So thank you so much for watching, and peace. We'll just sign out.